Hello, everybody, and welcome to the weekly Plus3 forecasting stock and commodity show. It is Saturday, July 31st, the last day of July, going to a new month, new trading month, eighth month of the year. Hard to believe how fast things go, isn't it, Barry?
I say that every month. I just can't get over it.
Yeah, we're here. We're here, and we're Um, next trades will be in the month of August. So we're going to do something a little different, which we'll talk about when we get to that point. But let's start off with the old tried and true Bitcoin. Barry and I were talking about that this week and how the triangle had morphed into sort of an expanding triangle, which you can see here. But man, that trend line that you drew in last week, Barry, really did the trick.
Mm-hmm. And the not to forget the 50% line. We always watch for balance. Once that got taken out, you can see how it gapped, right?
Yep. Once the half square was taken out, and right now we're sitting on the full square, so it's an important pivot point in this 41.7 41.8 area. We clear that, it's up and away. It's I wouldn't say I'm wildly bullish on Bitcoin, but I am much more bullish than I was a week ago, and it looks like it wants to get up and out. If you're going to buy in here, obviously you got to have a pretty tight stop, because if we cannot get through this full square, the weight of evidence would say we go back and test the half square again. So we're at a pivot point here, and it looks promising for the bulls.
If we can get above that, what's that level at the square?
It's 41,760, 41,770 area, 41.8, right in that area.
Mm-hmm. I was just looking at how that level, we tried to get through that early 2021, got knocked down. And when it did break, it broke hard right through it. It didn't sit there and pause.
No.
And the other two times in, late May and June, we ran up to it and paused. And this time, we ran up to it and again paused. We had 2 days up at that level. So it's not quite the break we got in February.
No,
at that level, right?
Definitely not. It bears watching, but we gotta see the price action that confirms this level is cleared, and then the odds will be that we're going to go higher.
Mm-hmm.
Well, let's throw it over to you and get your review.
There we go. So I'm going to, I know you're going to do a little bit of a different coverage today, and I'm going to as well, in the sense, spend a little bit more time on the ES. Maybe. Let's see. Mm-hmm. I have a couple of levels marked off. We have a 4340 line, dotted line, horizontal line, and also 4437 above. And this is sort of the bracket I feel that needs to be taken out one way or the other in order for the next move to happen. And bracket meaning not just bracket anything, but these levels are important, meaning if we can come down to 4340 area and still hold that support and rally, will still be everything be intact. But the next bullish phase is really if we can get above 4437 and hold that line. This is just to clear the sideways we've been in. All last week we're just back and forth. So to clear that, just a little false break is not going to work. We need to really take out one of these levels. Now, that said, we've looked at this square last few times, and we were focused on this 45 by 45 point a couple of weeks ago and looking for a correction because normally you can expect that at the end of the 45. And we got a quick one and a very fast recovery that stalled exactly at the half square. And you can say it's a little bit to the ups above it, not exactly in the middle of it. But to me, this is still undecided in the short term.
Sort of like a similar situation with the Bitcoin, right? It's stalling at the important spot. And
right, it's stalling. Well, the only difference would be here we're stalling. Majority price action was above the level.
Correct.
And but it's still stalling. Well, the fact that it's above the level, I'm looking at this as a bullish formation.
Mm-hmm.
Now, I did frame this with the bracket, so we have to keep that in mind for the next leg, let's just say. But for now, I'm looking. This is a bullish slant. We are holding above the old highs in July 13th, right in that area. And I wanted to take a look at because we always look at this from the last low, which was last year. Now, May through June, I think we talked about this 270-degree level and that 43.40 area. And while we were below it in May, I talked about the 270 being a critical level, and we have to wait till it clears it and sits above it in order to be bullish. And so now we've done it, right? We broke above it and we're sitting above it. This is what we mean by that. When we say break a level and sit above it, this is basically the idea. Now it could be close to the red line, closer to 43.40 or where it is. It's fine. I think that's we have to treat this as bullish until 43.40 is taken out to the downside. Now, 44.37, I said that I'd like to see taken out to the upside in order for the next leg to be established. So which is it, right? So the way I would deconstruct that is to look at the market being in a firm position above 43.40 and in a strong position above 44.37. So that would be a good way to frame that.
Mm-hmm.
And the fact that we're above 43.40 and settled, we're finding some value up there is bullish for now. Take a quick look at the weekly. And we've been watching this 72-week 144 in price to come to some kind of a conclusion. And this is just a textbook run up in a 2x1 along a 2x1 angle, very steep angle. This really can't go on much longer, I don't think. Even though, so right. On the daily basis, we're bullish. Yeah, it might be bullish till we go and hit that 4,500 or one of these levels up here. So we're in a very tight spot with a little bit more room to go and just clean up the, just finish this leg off in a nice way. So I would really watch this very closely. The upside is 44. That upside dotted line is 44.88. And the second lower one on the weekly chart is 43.48. Okay, these levels and the daily levels are not related necessarily. They're coming off their independent charts. Anything you want to add there, Ben?
I have weekly targets and resistance up around 45.42, so it's in the same ballpark you are.
Yeah, it's in the same ballpark. So for now, it looks bullish unless we take out 43.40. It's in pretty firm grounds. Mm-hmm. All right. Let's go on to the bonds. We've been bullish ever since we took out the weekly at 159.04 and continue to be bullish because it's holding fairly well, forming a little nice compression triangle that looks like it's going to ready to break to the upside. We do have a trend line that is holding really well over days upon days. The 65, let's just say 66 is the critical area to watch. That's some resistance up there. So it's possible if we don't take it out right away, we're going to probably just chop around here at this, right below it. But it looks like, looking at this little triangle that is forming, looks like it's getting ready to break. And if it does, it's probably going to pop fairly strongly and test this 72 square. That's my take on the bonds.
I confirm on the bonds. My notes are the daily's in a triangle. We're holding support. Resistance is, at around 64.30, wait for the break.
Mm-hmm. And here's the weekly bonds. Same story. Here's the 52 down from the high. We're well above that. Went up a quarter square, tested. So it's resting a bit. It just looks fine. It's looks normal. Looks normal for an uptrend. Let's take a look at crude quickly. Crude, well, we've been bullish. Last week we talked about how price came and tested the support level we had marked off, and we were expecting it to go back and test the highs, which it's doing. And we continue to be bullish and looking for the 78, 79 area to be tested at some point. And looking at the weekly chart, we have the 72 square we've been watching. And interestingly, this is, if you take the 72 in time that we looked at in the ES chart and the 72 in time in the crude chart, we have a 1 by 1 that's being followed in the crude chart and 2 by 1 on the S&P. And they could, they're both heading in the right direction and right into a square. Of course, the S&P is twice the, it's up at the 144 level, but it's interesting that they're both running a very strong angle right into the square coming up.
Mm-hmm. Similar cycle, it looks like.
Yeah, very close. So they're both bullish for now. Next, we have to take a look at gold. I think we left off last week saying that it's in consolidation pattern, and we gave two levels, 1789 and 1832 to bracket the consolidation, but with the bullish bias, being that it's holding the levels below. And last week we tested the highs again and pulled back a little, but the fork and everything else is holding its own, and I think it's still bullish. It's positive. Let's just say it's not a raging bull market, but
like a lot of these commodities, they're coiling up.
Yeah, it's coiling, it's consolidating. So
in a bullish fashion too.
Mm-hmm. So I would call this a bullish consolidation, and definitely want to watch these trend lines coming off the lows, just to not to completely ignore the technicals. So keep an eye on those, but gold looks okay, especially if you look at the weekly. Yeah, we drew this box in last week, talking about the fact that, what would we say about that? Yes, 17
range bound basically.
Yeah, range bound 1766 being the lower boundary, and once we get above the half square, which is around 1870, we'll break this long sort of fourth wavy kind of a consolidation and break to the upside.
If you look at your square too, you're coming up on the timing, right on a timing node, right?
Right, that's from the high 52 weeks. So
Mm-hmm.
that could often get things rolling. So, but those are the level to watch, 1766 to the downside, which it held, last week. And yeah, I think probably a little bit longer consolidation, but but in a firm footing. Not doesn't look that weak to me. It's holding at the right places.
Mm-hmm.
Take a look at the dollar. Well, again, the 91.42 is off the weekly charts. We've been bullish since we broke out above that. Did a quick retest, ran up, and we had this 92.60 area as resistance or a target. We messed around up a little bit, pulled back last week to the quarter square exactly. And my stance here, as long as it's above 91.40, that the dollar is bullish, and we held that quarter square and we rallied back fairly strongly on Friday. So I'm expecting it to hold above that for the time being, and still bullish. And I think there's a good chance of us testing the 94 area. So see how that goes.
The dollar's got a lot of people confused, that's for sure.
Yeah, well, you have to take it. You got to take it step by step now. It's you can look at the weekly. Right, we're just kind of stuck in this wide range.
There's the confusion.
There's the confusion. Exactly,
Right.
exactly. And we didn't quite break above the 72. That's putting up the roof up here, and the floor is the half square. So I'm guessing we're going to be in between this. Not much to say here on the weekly, other than probably going to be looks range bound. It's probably going to be range bound. But we can look at the daily for smaller clues and focus on the key levels. So the quarter square is it was Friday's low. We can take it as 91.78, and above 92.59. I think prices should firm up, and if we can get above 92.59, I'm expecting it to test the half square, which is around 94. That's it for the dollar. Euro, pretty much the inverse story. We were heading down, and the idea was for it to test the old lows, false break possibly, at least to go and test it. Got fairly close, pulled back. It broke the downtrend line we drew in last week, and so my idea is I still feel it's pretty much inverse of the dollar, so I feel like it's probably going to come back and at least test this line. And
where's your full square down there?
The 72.
Yeah.
Well, it's it would be the low here. 1704.
Mm-hmm.
Okay, so that's, let me take a look at it from above and see. So you can see the high was exactly at the half square.
Mm-hmm.
So we're stuck in this quarter square here. And until we get above the half, really, there's no point in getting our bullish on the euro for now. So we'll wait it out and see. Yeah, that's all I got for the, do we look at the weekly? Hold on. Yeah, how can we forget this one? So weekly, again, we have the fork drawn in for the last few weeks, and we were expecting a test of the fork. Got close, but I don't think it's done. And so we're watching it cautiously with expecting the test of the lows and the dollar moving a little bit higher. Let's see how it works out this week.
Excellent review.
Thanks. See how it goes.
Mm-hmm.
Yeah, I think the dollar is the thing to watch here. So
it really is the key to all markets right now, isn't it?
Yeah, I think you really got to watch this 91.80 area and also the 92.60. I think that's the bracket to watch. If we break out to one side at this point in the cycle, we're probably going to move. So watch those two levels. Yeah, I think that's all I got for now.
Okay.
Let me put it back to you. Hold on. There it is.
As I discussed earlier, what I want to do today is something a little differently. We're going to zoom out, and we're going to try and do this once a month. And since the monthly printed on Friday, and we have a new trading month starting with Sunday futures, I thought we'd step back, look at the highlighted markets that jumped out at me after my review, but look at it from a monthly basis, sort of a bigger picture view, not get caught up in the day-to-day noise or the intraday noise, but really look at the bigger picture and try and get an idea of, where's money flowing into and where's money flowing out of. This, as you can imagine, is with the steepness is the ES monthly. I mean, we thought that was steep on the weekly, Barry. Look at that on the monthly.
Yeah.
Yep. Pretty amazing.
It's incredible. Anyway, and I was looking at the Apple monthly the other day. It's just unbelievable. The the slope. Anyway.
Yep. So the reason I'm showing this is a couple things. The next resistance is up here at the half square. And the half square is at around 45.18. So that fits in with your numbers, Barry, where, if we keep going, that's certainly a possible target. And then after that, in a total blow off, you're talking 5,000 area. But it's important to see where you are, where we've come from. I also, in white here, I just did some timing just to kind of see from sort of important points what we've got. Interestingly enough, we are at 225. In July, we were at 225 months from the '02 lows. We will also be 72 months in February of 22, which is right in the middle of some other cycles that we've mentioned. Will be 72 months from sort of the kickoff of this whole leg in 2016. We kind of were chopping around, messing around here with corrections, and then took off. And this is where sort of the parabolic stuff started. So it's interesting to see that 72 comes up and it falls right within that first quarter cycle window. So that's the ES monthly. Anything to add on that, Barry?
Well, I think be a little cautious would be a good idea.
Yeah. Yep. Yeah. And just
when things start to go vertical, you always have to be alert. There's no question about it. So,
and just in case you haven't seen it on the tweets or anything, sort of our bigger picture pattern is, which is subject to change because it's longer term, and you got to take into account what price does, is some sort of pullback here, and then the blow off into this Q1 timing that you can see as the dotted line here is April, March of 22. So that's just for reference. Let's look at the NQ monthly as well. Here you can see how we've the slope of the curve keeps getting steeper and steeper and steeper. The interesting thing on this chart is we are right on a half square for timing. That was the month of July. So we've hit that. Doesn't mean it's going to turn, but it means you pay attention and you look and you see what does price do coming out of that. And we're just barely above the half square. The half square's at like 14,850. And we closed at, what was it, 14,955. So if we lose this half square, you got to think that the odds are going to favor. We're going to go back down and at least test this full square. So this is again a perspective on where we are on the monthly. There is timing here, and we are right in the neighborhood of this half square. So watch that level closely and see what price does if we get stuck below it. A couple other markets I wanted to look at on a monthly basis based on where they are in their cycle and what they're doing. This is the wheat monthly. The grains have had a really good run. Latter part of 2020 and they set highs in the early part of 2021, have been correcting since. Wheat looks to be the first one ready to come out of its doldrums. Last week I highlighted all of them. This week I'm specifically looking at wheat. And the key thing with this monthly that I want you to look at is we're above this full square price-wise. We closed above this full square, which the support is at 677. And notice that the price action up here is above this entire long consolidation, the highs of this entire consolidation. And these are highs going back to 2014. So that's significant. We're correcting. Yes, it's sloppy. Yes, it's choppy, but we're getting higher lows on a monthly basis. And the price action is sitting above this massive base of price action that occurred over a 6-7 year period. What do you see on these kind of monthlies when you use your telescope, Barry?
Well, they seem to be slow, but they're steady.
Mhm.
So um, I think we have a long way to go till these are done.
Agreed. Agreed.
Mm.
Let's go to the next one. This is the monthly for gold. Uh, the gold analysis and analysts and policies and research is all over the place. Some people say it's going to 8,000. Some people say it's going back to 1,000. So to get sort of above all the noise, you have to really zoom out, look at the longer term charts and see what they're telling you. Well, what this one is telling me is we've been struggling with for the past year, this resistance in this 1920, 1930 area, which is the old high. So it's not surprising. But look at where the price action has been for the past year. It's checking these highs from 2011, 2012, and it's above all of this. Found support exactly where it was supposed to, right around 1670 on the half square. And it's just steadily building, holding trend lines. Trend lines are getting steeper. In my opinion, the odds favor the next big move out of gold is going to be higher. Now, does that mean they're not going to come down and do a clean out move and take out all the stops that everybody had, got long anywhere in here? That would be perfect because that's what they almost always do. It would be a perfect setup. But the longer term bias, as you can see from the monthly chart, is the price action is bullish. And I think getting yourself positioned or being ready that if we do get this clean out move and it reverses, jump on it. And you can see here's an example of the clean out move, right? They had lows that were in place for 3 years. They took them out, and then we got above it, and they haven't seen these prices since. So is it out of the question that they're not going to try and take out the lows or take out a previous month's low or something to scare everybody? Just be ready and be aware that it's a real possibility. You've seen that clean out move in a lot of stuff, haven't you, Barry?
All the time.
Yep.
All the time. Anyway, yeah, commodities you see a lot more, but as long as you're aware of it.
Here's another one. This is silver. Silver's also, if you look at it daily, people getting frustrated. I mean, you drop below a daily, forget it. It's just sloppy, not going anywhere, frustrating. Everybody's sort of ready to throw in the towel on, we're getting inflation, and gold and silver have done nothing for a year. So they're worthless assets. Don't get rid of them, right? Get in something that's moving. Well, let's zoom out on the monthly and see what the monthly's telling us. Basically, we've been in a triangle. You can see the higher lows coming in. You had one higher high, but mostly it's lower highs, and it's coming to getting closer to the apex. But look at where the price action is occurring above this entire 8-year base, and that's bullish. So we wait. You try not to get too excited. You got to wait for the breakout and a test, then you buy, or you accumulate on pullbacks to support. But longer term on the monthly, this is bullish.
Mm-hmm.
So silver looks bullish too. Let's look at copper. Copper is an example of one that's a little further along, but it's a similar principle. Broke out of this base that it had built for about a 7-year period. When it broke the downtrend line here, we had a beautiful move higher. We're currently battling with this full square resistance in the 440 area, 441, which is where the old highs were. So it's completely normal activity. But again, as long as we can hold above this half square, and as long as we're holding above these highs from these previous, these previous peaks that we saw in 2007, 2008, and we're staying above this full square, I mean, you can't be bearish on this. So copper looks like it's building a triangle. You can see that it's starting to form this triangle here, where the apex would be around right where it should be, which is this geometric support and resistance. So give it time, and copper looks bullish as well. What do you think about the copper, Barry?
Copper looks good. It's we made a new high. We didn't really turn back and sell off, which means there's a less of a probability that it's a false break. Mm-hmm. We're holding the square fairly well. So yeah, I think it's firm. I think the place is good.
Here's another one.
As long as it's holding above that half square, I'm good. I'm bullish on copper. So.
Mm-hmm. Here's Crude, one that Barry touched on in his review, and I want to show it again from a monthly basis where we are. We broke out of the downtrend line early this year. That was a downtrend from the 2009 highs, and we've been battling sort of with this half square in this 74, 75 area for the last few months. But again, we're holding above these highs here. We're challenging these highs here. We're above all this price action here. I'm very bullish on Crude. I think you ride the pullbacks, you buy pullbacks to support, and we see how this pattern plays out. There is an inverse, it's not perfect, but there's an inverse head and shoulders pattern here. You got a shoulder here, you got a head here, you're building a shoulder here. Maybe we chop around here for a few months, while it attacks this 75 level. But if we break out through this pattern, the head and shoulders target's 146, which is up here, the old highs.
Yay.
It's not a guarantee, obviously, but all you're trying to do is get the possibilities and probabilities on your side, and then you take a position and you manage the risk. Because we know that if we're buying on this breakout and it pulls back and it holds, we know we can put our stops somewhere below this half square.
And what's the full square right below that?
Down here, we're in the 62, 63 area.
Got it.
So right now, we're at the top of this half square. So we gotta really settle above there to open up the price pattern, and odds for the next higher level, which is in the 88 area. But for now, Crude is doing what it needs to do to be bullish. Let's check the last one. And that's our favorite sun here, which the last few weeks and months we've been talking about, which is natural gas. We started talking about it when we got this breakout here last month. We've escaped the half square. The key thing that I was looking at, and I was talking with Barry about, is there's a lot of price action that was below this half square. If you go back, the last decade or more, and as long as we can hold above this half square, this thing is bullish, and it's on the road, to hitting this top square, which is 567 area. Then it's got to, deal with the highs from 2013 and 2009. But once it deals with those, then we're looking at, the next square up, which is almost $10. So watching this one is sort of the laggard in terms of the pattern. But that's also a benefit because you're getting into the pattern earlier than, say, like a copper, which is already up at the highs and trying to, go up and out for new highs. So natural gas continues to do what it needs to do on a long-term basis, on a monthly basis, because remember, monthly we closed up here, which is above the half square. So as long as we're above that half square, odds favor we're going up to the full square, which is in 570 area. So still bullish, very bullish on natural gas, and looking for higher prices going forward. What do you have on gas, Barry? Barry, are you there?
Yeah, I'm here.
Okay. Do you have anything to add on gas?
Not more than what you said. I think it's early in the break, and when it moves, it really takes off. So unlike wheat, so I'd say be ready.
That's right.
Watch those daily levels and patterns.
Yeah, and given where we are in the cycles, it's a good idea to pay attention. Good idea to zoom out and see where we are, bigger picture, and that's what we try to do a little bit this week. And let's see what we'll do this coming week.
And there's a pretty wide, but fairly well timed 3 drives to a bottom there. First one being in 2012, and then 16, and then 20. So usually moves that come off of those are fairly large. So I would say if this is going to play out in a normal way, this is just getting started. So we'll see.
Absolutely. Well, we hope you enjoyed the show this week. Good luck trading this week, and we'll talk to you next weekend. Take care, everybody.
Have a good week. Thanks, Ben.
All right. Bye-bye.